All right. Welcome back. A little bit earlier today. I'm not late, so that's good. That's good. All right. Busy day today for me. Um, so let's figure out what is going on here. First of all, I kind of redid a little bit the chart because we have a lot more clarity now than we did before. Again, going back to 2018 and 19, and you look at the chart. And, we had 3.4% unemployment. I think a lot of people just kind of forget that and just look at the price action. And off they go. Oh, yeah, it's bullish. Yeah. I had a friend of mine yesterday. Uh, he's upset that he left one of his $3 million out of the market. I'm like, what are you, dumb? What are you talking about? If the market was down the equivalent amount, let's say 40%, would you be mad that you didn't put in your mill? He's like, well, yeah, that's true. But, well, yeah, believe me, this thing can turn around at a blink of an eye. And and here's the biggest problem of it all: that when a top, like a big fucking top, happens, how does anybody know? How do you know? How is it that the perma bulls are not going to be like, well, buy the dip, right? They're not going to know, and that's the problem. You can't be one-sided. You can't just look at the price and, oh, look how, oh, it's going, oh, I should have put the other mill in. I should have bought more. I should have. That's greed. When you get to that point, and this guy doesn't know anything about uh, investing, is, just buys his shares of stock and bonds and diversifies and, the usual stuff, which is fine. But why would you be upset not having the mill in the market? Why? Because you're greedy. And when that greed sets in, that's the shit that kills you. Because how would he know to pull it out when he's supposed to pull it out? He wouldn't. He wouldn't. And that's the problem. And that's why you reduce risk in volatile times, uncertain times. It's not because everybody's stupid that they sell. No, you reduce your risk exposure, let things settle down, then you go from there. All right. So again, you look at the unemployment rate, and this one is a little funky because this recession has carried on so long. People are falling out of the workforce. There's so many people in the pandemic unemployment insurance, right? And extended weekly unemployment and whatever you have. And you look at the numbers, and it says, well, it's 712. No, you got to look at all the numbers, the entire number. Because come December, see, it didn't matter until now. It didn't matter if there was people on pandemic unemployment insurance and all this other fancy stuff, because you're like, okay, they're going to extend it at some point. It's going to continue. Let's just stick with the main number. Well, now you can't do that because you don't know if these people are going to not get those free helicopter money anymore. At this point, you're starting to get still such high numbers, and you got to include all of it. You can't just say, well, I'll just take the 712. No, no, because even if you take it from the 712, well, you should have been below 700 at least, below 700, and that didn't happen. And that's going into the holiday season. That's when, if you look at the censored employment, they got laid off, but that was replaced by hiring temp workers for the holiday season. So even even with that, you couldn't get it under 700. Um, Deaths now are what, 35 every 35 seconds. American dies. I use a different matrix. I say, look, for um, every day that goes by, I measure it by the number of 777s that are crashing with Americans on it. We are now up to 7 777s. I'm sorry, 9 777s crashing, full of Americans and killing them every day. Every day. It's it's really bad. I don't think people really understand. They're like, well, fuck, it doesn't bother me, so who cares? Yeah, but I don't think you grasp the severity of the situation. And we still have months to go. It's not like it's going to be over tomorrow. It's not like, hey, we're going back to normal. I don't know. It's really, really fucking bizarre. And the market gets all happy. Oh, good. The unemployment number still sucks. So, yeah, we're going to get that stimulus soon. Buy stocks. We're going to get that stimulus. Right? Shit, I should put that extra million into the fucking market. I don't know. It's a recipe for disaster. It really is a recipe for disaster. I tried very hard to make a bull case. Okay, we're gonna do this. We're gonna think of it like this. We're gonna. I can't do it, man. I don't know if it's a mental block or whatever the case may be. I don't see it. And when you don't see it, you don't see it. It's that simple. It's just garbage. And that's fine because price is an advertising mechanism. Let it advertise. Let them bid a price. I don't. It doesn't phase me. The reality is the reality, right? American is dying every 35 seconds. 9777s are crashing. At some point, it's going to hit that hey, yeah, vaccine is coming, but it's still far, far ways away. There'll be, I guess now the CDC is saying that we're going to lose something in the neighborhood of 500,000 people, and that's not the excess deaths. That's just the counted deaths, the certified ones. By February, um, Europe said they're not going to look at the vaccine until December 29th. So that's weeks away uh, from what the Americans are doing. UK already did it, right? They're in the process. Russia has started to vaccine next week. Again, how do you know what how long it's going to take for the immunity to wear off? We don't know. How is the logistics going to be? We don't know. How much of an impact? How long is it going to take to have a real impact uh, in cases? We don't know. You look at Europe and all the lockdowns, and immediately you saw cases start to come down. So we know it works. We know lockdowns work. We know lockdown saves lives, but we don't do it in the U.S. It's not American, I guess. It's better to kill people. Fuck them. It's not going to bother me. So at what point, how bad, how many deaths do we have to have per day? 4,000, 5,000 before people start saying, well, maybe we should lock down? I don't know. What do you think? Bob, Biff, Jane, Karen. What do you think? Maybe? Huh? I don't know. Honestly, to me, it's just. And again, it's not the COVID. It's not the deaths, as bad as it is. Do you know what the long-term effects of COVID are for those who survived it? Nobody knows. Nobody has a clue, right? Do we know how long the immunity is going to last? Nobody knows. We'll figure it out as we go. Don't worry about it. Do you know what the side effects are? What percentage of the population is going to have bad side effects? We don't know. Don't worry about it. Buy stocks. Do you know what the long-term effects from this high unemployment, the scarring, the companies that are going to go out eventually, the small businesses that are going to go out eventually, the people that are going to lose skills eventually? Look at me. I'm a pilot, right? How long can I go before not flying, before my skills start to deteriorate? Sure, it's like riding a bike, but when you go back into that simulator, you got to perform, right? You got to get tested. What are you going to do? Be all over the fucking place? Be like, oh, fuck shit, I forgot that. Oh, damn, I forgot that too. And believe me, even when I go on vacation for 2 weeks and I come back, I forget shit. Because there's so many procedures, there's so many laws, there's so many uh, standard operating procedures, so many failures I could possibly have. When you're flying constantly, you take you're in the airplane 8-10 hours. You take a glance over, you read the book a little bit. Tell me about this procedure. What if I get this? Yeah, you review. Time passes. You think that's not going to affect when you're not working? It's going to affect a lot, right? So how do you get back into it? How do you get all these people back up and working? And not only working, but working at their previous salaries. Salaries are suppressed. Don't worry about it. Government is going to print and it's going to make all that better. No, it doesn't work like that. So there's long-term damage that is going on to the economy. They can buy it all they want, but it is what it is. Okay. All right. So just remember, we right here when I said, okay, now we're euphoric. Right here, this was a China, all China. Right. We went to euphoria, dumped 33 days, popped up, back to euphoria, all driven by free, cheap money. And I love the chart today where it showed, oh, lending standards or whatever the hell, what was it? I forgot what it was. But oh, money has been the easiest it's ever been in history. Wow, let's celebrate it. And what's the economy doing? What's the economy doing? The economy is doing nothing. Nothing. It's garbage. We still have such huge deficits which don't even show up yet. Wait till they show up. Deficits are going to be all the way down here. And it'll be all the way down there. And where's the economic recovery? Where's all this profit that's going to come? It's going to be ugly. Anyway, let's get started. Equal weighted S&P, right? Double topping here. Dividend weighted, little pullback. We got a nice little F flag correcting through time. Right there. Okay. So it's broken the uptrend line right here, and now it's just correcting through time. So it's a standard, push up and rise in an F flag. VIX still remains suppressed right at that normal, quote unquote, normalcy range. New York Stock Exchange still battling that previous high. Dow Jones pushing up against this wedge. I would expand it. This is more correct. All right, so there's a little bit more upside for the Dow Jones. It's up above 30,000. Woohoo! The big magic number. S&P we just talked about. It's testing the previous high. Tried to pop out today. Didn't work so far. It's flat for the day. Let's go to my NASDAQ. All right. So we know the point of control is somewhere around 12.4 something. Let's expand it for the week. This is the first. Today is the third. So I think we had a little bit more back here, but it doesn't matter. More or less, you can just eyeball it, even if you take it back. It doesn't matter. It's still the same. It's about 12.5. Okay. So it's hovering right above that for now, right? Just above the trend line. Looking to push a little bit higher. And these are the key points now, right? These are the key points. Going from the bottom up. 1, 2, 3. All right, so this is the range that we're in. It can push up a little bit more, up to 12,580, and then it will start testing this area here, which also happens to coincide with that just above the previous high. Again, it would be a double top. Small caps trying to break out from this megaphone, fighting it, right? Little resistance there. Transportation's just still hovering at that double top. All right, so nothing there. Google and the fangs, right? Still can't manage to break through. Now you're coming into dual resistance area between this one and this one coming down together. This is going to be a little bit tough for now. Europe broken out, looking really good. Looking really good. Okay. UK, nice continuation to the previous high. Let me just move this. All right. Yeah, definitely broke the previous high. Now it's testing the double top, which would be here. A little bit more, and it'll be testing the double top. We could perhaps do something like this now. It looks a little funky, right? So what I'm thinking it's probably doing, this is a 1, this is a 2, this is going to be a 3. Okay, and then this line here, because it looks funky, this will probably end up looking something like this. It's working its way through it. Whenever it looks funky, it's doing something that you don't understand. And that's okay. Just let it go. Just understand that it's building something. Denmark, a little bit of a pullback today. World Stock Market Index really pushing higher very nicely. Wave 3, going towards that previous high, which is from here about 6% higher. There's a lot of room to go with this one. And this one is better in the sense that, Asia is not that bad. Uh, Asia is doing fine. Their unemployment rates are okay. It's not crazy over there. You start going into South America, and Europe, that's where all the problems are, right? Jets, beautiful push through today. Wave 3, strong. 1, 2, 3. Coming to test the bottom of the channel, the falling channel prior to COVID. Way ahead of itself. Way ahead of itself. There's no question about that. But again, it's the euphoric. It's that, oh, we're going back to normal. We're going back to normal. Once the vaccine is out, we're going back to normal. Yeah, wait till somebody dies on one of the vaccines, and then we'll talk about it. Uh, this is my little indicator. Kind of stalled out. This is Hilton, Diana Shipping, which is dry cargo, Avis, Delta Airlines, Royal Caribbean, and Tsakos Energy, which is an oil tanker company. And this is my little index. And obviously it's in a wave 3 up. Okay. Stalling here. Nice little F flag. Nice little high base. Correcting through time out of this structure here. Right. So let's see how this behaves. But it's been a very good indicator in terms of what, showing you what parts of the market are moving. China, high basing. Okay. Hasn't done much. This is the fangs of China, and they've been stuck there now. God, I don't even know, about a month or something. So let's see if this can start to push higher. This is actually a very good buy right in here, because at some point this is going to break higher. Okay, so it's doing that correction, the consolidation right into support, and then it pops. At least that's the previous high. So this is something that maybe it might fit nicely in somebody's portfolio. Keep that one on the watch list. Nifty 50 continues higher. Everybody's happy. Japan continues higher in the F flag. Taiwan continues higher. And again, I can see Asia. Taiwan, I think, had, I don't know, some ridiculous number, 500 or something. These guys are they're kicking ass. Korea kicking ass. Look at it. It's not even a double top anymore. Well, it is, but I don't think this is going to maintain a double top. Okay. You're going to get some blow off top. You'll get some kind of move like this, and then it'll start to correct, and then up again. But again, Korea, Taiwan, China, Japan, they're all doing really good. Rightfully so, too. Saudi continues to pause. Australia breaking down a little bit, high basing. Brazil, remember this one? We changed the color because it hasn't hooked yet, right? So continued higher today, makes a lot of sense. Wave 3, and remember, when you get a weak dollar, this is good for the stocks of emerging markets. It strengthens them. Okay, so keep that in mind. Emerging markets starting to break out of this long-term channel. And, Very thrusty, broke the bottom, is going to break the top of this big wedge. Let me change the colors here so it doesn't look funky. Okay, so yeah, so let's see how this is going to behave, how far this is going to run. Ideally, what you wanted to do is to come back, correct, build the pressure, and then off you will go. That's the way you want to play that one. No need to chase. You can certainly add a small position, and then when it comes back, you can add more to it. That's okay, but don't put a full position on. Emerging markets, the other ETF, doing nicely. All right, so now I skipped something somewhere. I was in emerging markets. Okay, there you go. Germany. Let's go to an hour. All right, Germany's still in that rising and flag thing. Again, this is something that you can buy, right off the support, and then take it to the upside. That would be assuming it goes to the top. Not a whole hell of a lot, huh? So not much there. All right, let's look at bricks. Okay, bricks are doing good. All right, it's double topping from this previous high back here in 2010. Right, again, remember, weak dollar, good for emerging markets. Let me switch this over. Skip this one. Um, real estate not doing much. You kind of, it's a structure above a structure for sure. Right in here is the structure. It's kind of building that pressure for the next move up. So keep an eye on that one. Maybe I should identify this. Okay. So, I mean, it held a double top, but it held in a high base. So that's bullish. So now we need to get rid of these. And assume wave 3 is going to come here at some point. Okay. Financials. Continue to, grind a little bit higher up against resistance. Not enough of a hook, so this should be gray. Okay. Let's see where the wave ends. It kind of broke down here and then just kind of popped. So in a sense, it's a structure below a structure. Right. So if this gives way, then you would look for further downside. Something like that. Not there yet. Pure banking ETF, KBE, continues to push higher. Oil is a little funky. It broke out now for the second time. OPEC said that they're going to start to increase their output by 500,000. Again, it's based on global demand. And from what we're seeing now, what's going on, um, it's going to take about 2 quarters. Remember when in March they were like, yeah, by the end of 2020 we should be fine going into 2021, blah blah blah. Remember that? Yeah, well, that didn't work out very good. So what we're looking at now for better economic growth, uh, at least 2 quarters, at least 2 quarters. Okay. So right now they're benefiting from this euphoria. Okay, that's fine, but it's not pushing through yet. It is above the previous high. It is building a high base. I agree with all of that. You know, the, the setup looks bullish, but again, when it keeps breaking out and not following through in a nice little thrust move, it's kind of grindy. I don't know. I don't know. Gold broke out, so this one we're looking for it to go much higher. Commodities continue to push higher. Uh, they're basing right now, right in here. Okay, building that little pressure for the next move up. It could build here for a while, then get a dump, test the trend line and then off it goes. So that's okay. Nothing wrong with that. Commodities again. This is ETF B DBC. All right, so we'll draw this in here. Nice little high base. Forget about the double tops. That's out the window. All right, and that's always the difficulty. You never know if it's going to double top and reverse when it gets to that previous high, right? Because it's got two options. It can base, okay, or it can reverse. So you don't know if it's going to get through, and then it does get through, and you're like, okay, it got through, good. Let it base, and then you want to take it to the upside, right? So that's what it's doing. This is textbook. But those previous highs is not easy trade. It's easy for somebody that doesn't understand and says, "Oh, it broke the previous high. Yeah, I'm buying." And sometimes it works, sometimes it doesn't. More often than not, it's going to work. That's okay. But the times it doesn't, oh, it can hurt you. It can really hurt you. All right, precious metals, popping back into structure. Okay, came down. Uh, it would look like this. It's a little funky with this one. Maybe I should zoom out a little bit. There we go. That's probably better. All right. So we have a 1, 2, 3. Now it's popping. All right. Broke the trend line. So that looks nice and bullish. Right. Again, commodities. With a weak dollar, these things should really push up higher. Base metals continue higher. Steel kicking ass. Palladium tried to break down here. Didn't do a good job of it. Copper continues to push higher. High basing. Where is it at? High basing right in there. Okay. So that's good. That's healthy. Let it high base, then let it push for at least one more up. Agriculture, still doing that consolidation thing. Sugarcane trying to break out. Again, it's a corrective structure. Let's see if it goes incredibly bullish or not. Corn, all right, same thing. Wheat broke down. We're looking for this one to start to bounce at some point. All right, look for this to start bouncing. Soybeans, okay, just correcting a little bit. Forget about net gas. All right, Bitcoin. Let's talk about this one. This is a bearish structure. And again, you get the thrust down move. Then you get the 1, 2, 3. Very thick and consolidated, right? Usually what happens with this is you'll get one more down. And then possibly somewhere at the previous low, at the support line, it'll get another push higher. You're going to end up with something like this, okay? And then you're going to see, is it going to break out or is it going to start breaking down, okay? But for now, don't be surprised to see it come back, okay? I'm not saying it's going to happen, but the structure, the way it's set up, it looks like it wants to correct. And again, there's nothing wrong with that. Litecoin, high basing, double top. Again, that's what I'm saying. It's a previous highs. Okay, previous high. Look what it's doing. Okay, so does this start to fall apart or does it start to break out? Gotta wait. It's not black and white. Ethereum, same deal. You could make an argument maybe it's a triple top or something, right? Dollar, fucking weak as shit, right? Below 91 now. So again, looking at it from the you know from a bigger time frame, it's really starting to push lower in a much faster rate. Possibly comes to test this previous low. I can remove this now because it's broken. Okay, comes and tests this previous low and then starts to bounce, right? So you would get something like this and then start to bounce back up. See how it does it. If it does something like this, you take it to the downside. Okay, but it's definitely it's out of the whole entire structure. It's done. All right. So the IMF um, special drawing rights. This is another world reserve currency. It's a much smaller world reserve currency. But as you can see, and we've been talking about this now for over a month, that this is going to break out. It's going to break out and start running. And sure enough, it has. U.S. dollar, Japanese yen, pushing lower. Euro broke out, continues higher, almost at that 122 level. Great Britain pound, we've been talking about this one being bullish. That I like it. It's an inverse head and shoulders. At some point, this is going to break, and when it does, it's going to be nice, fast, and furious. And we're probably going to break this as well. All right. Um, and that's a very long-term resistance area. So you would take this for a long run, a nice long run. Okay. Needs to break though. When the dollar's falling even against the Turkish lira, you know you're fucking screwed, right? The dollar's not doing well at all. Dollar's falling against the Russian ruble. Dollar's falling against the CAD. Dollar's falling against the Australian dollar, right? And this one we said it's a nice long-term trade. So you want to take this one. All right. New Zealand dollar, again, same thing, right? There's going to be a nice long-term hold. All right. Nice little run. Doing really, really good. And if you compare the two, uh, Australian dollar, New Zealand dollar, you're going to see that the New Zealand dollar has been underperforming. So at some point, you know, the lower this comes, you're going to want to add a little bit more to the Australian dollar, uh, since it's going to probably do something like this. Right? They'll come down to a certain point and then start bouncing again. Uh, so if there's a correction in the New Zealand dollar, you can protect yourself with the Australian dollar. All right. All right. Where was I? Even dollars falling against the Mexican peso, and the dollar, of course, is breaking down from against the yuan. We identified this a few days ago, so naturally it's going to do what it's supposed to. Nice little bear flag pushing lower, and the euro index has broken out as well. Okay, so what it appears to be happening is that, okay, I'll buy stock short dollar, and you know I'll buy some gold and Bitcoin to hedge with some commodities. That's what seems to be the theme right now amongst the market. Buy stock short dollar. You know? It takes care of any stimulus that might come along. It takes care of you know the economy that's not doing as well as it should be. So it fulfills a lot of, it ticks a lot of boxes. Ticks a lot of boxes. 10-year. Starting to pull back again. Okay, but it's maintaining above that 90 area. So let's see if this is going to be another one of those, you know, consolidations to the next level, which is the previous highs. And then if it continues to go higher. And again, how does anybody know? How do you know what it's going to look like when this thing blows up? If I'm not saying it's going to, but hypothetically, let's say it does blow up. If everybody's so trained and ingrained in their brain that you know interest rates can only go lower, and the Fed, you know, is going to do whatever it takes to keep them lower, and you believe it, and then you just never ever consider the possibility that you know this thing could blow up for whatever reason. You know, look at repos, right? Repos weren't supposed to happen, and they did. But how do you ever anticipate something like that if you just kind of completely discard it? I think it's a mistake for people to do such things. I don't think that's very smart. Taking a look at the aggregate bonds are pulling back again. They're being sold off. We got the breakout, so we can get rid of this. We got the breakout from this tight, but again, not doing a very good job pushing higher. Hence why interest rates are lower. Junk bonds continue higher. Of course, government is buying them. Um, European banks, they're getting a lot of help from the QE, from the central bank, and so forth. So they're actually doing really good. They should also be gray. Okay, so let's see where this tops out. But it's definitely in the wave three. I don't think anybody can argue that, right? First counter trend move, 1, 2, 3. Where this ends, I don't know. But it is in a wave three. Emergency currency fund ETF, right? Continues higher. We'll skip that. IBB, we're still waiting for this one to break out. Hasn't done it yet, but it has broken out from this structure here, testing the previous high. Again, when you get to that previous high, it's always going to be difficult as to what it's going to do. Is it going to sell off, right? Build the pressure and break out? You can't know these things. But you do know that previous highs are potential areas of pauses or reversal. Water continues higher. Hotels still double topping. Hotels versus jets. We saw jets really push up today, right? So now you're seeing that hotels are underperforming jets. Let's take a look at the Royal Caribbean, the cruise liners, because we haven't really taken a look at those. And this one has again broke the previous high. Nice little bull flag breaking out today. All right. So that's what I mean when I'm saying it's testing the double top. Kind of has some consolidation, breaks out, little bull flag, pushes higher. Textbook. Textbook, right? So we should draw this out now. So we're in a rising F flag above the previous high, which makes it a wave 3. Okay. So that's the flagpole from here. And now you're in the rising F flag. All right. All right, let's look at Norwegian pushing to the previous high. Carnival pushing towards the previous high. All right. All right, let's take a look at the fangs more closer. Apple broke out here recently. You can see it's in a wave 3 as well. Right. So it's breaking out, testing the previous high. Kind of stuck there now for 2-3 days. Not much follow through. Amazon still stuck within this wedge. Microsoft, it's about to bounce from here. Facebook pulling back a little bit, still consolidating. Netflix also consolidating. Google made a new high today. Okay, new high in Google. Again, wave 3. 1, 2, 3. Definitely above the previous high. No question about that. Ending pattern. So that it doesn't look very good for Nasdaq right now. That it can push a lot higher anytime soon. It needs help. Needs help. Nvidia, right, broke out, but again, it's not doing anything. Tesla, it was upgraded today, 780 or some shit like that. Whatever. They can say whatever they want. Doesn't matter. It's back up towards the previous high. And that's about it. All right, let's take a look at the airlines real quick. Delta is pushing through, but again, this is not a confirmed line. That's why it's gray. Pushing up in wave 3. 1, 2, 3. Okay. You got American Airlines. It's also pushing higher. Southwest kind of stuck there, previous high. Alaska pushed a little higher today. JetBlue a little bit higher. Spirit previous high. Allegiant doing okay. Push higher today. Uh, Hawaiian kind of stuck there. SkyWest testing the previous high. Ryanair did really nice. Okay, so you had this structure in play. Nice little wedge. This is the flagpole. Broke out, broke the previous high. Nice thrust move. Not bad at all. Um, so what it's doing now is testing the bottom of the long-term trend line. Probably will find some resistance in here. Okay. The European airlines, I am, I am, I don't want to say more bullish, but I just think they're probably in a better position than some of the U.S. airlines. And I'm talking about the low-cost ones. I'm not talking about Air France, British, Lufthansa. They got some problems, but the low-cost carriers ones, I think they're good. Uh, Same thing with EasyJet, right? I've been talking about this one as my favorite in Europe. I never understood why it was so undervalued. It's doing really nice, pushing higher today, right? Breaking out incredibly bullish, super. And that's what it should do. Really, I don't understand why it was so beaten up. Now, there was there's a petition between the European CDC. I don't know if I mentioned this before or not, and EASA. I think I have, but I'll say it again. Where they petition, they say, look, you got to stop with this red zone, green zone, and all this stuff. You should have open skies, just like the U.S. Um, but here's the problem: that they think that they're being held back by regulation. And the reality of the situation, that's not the case. Because you look at the U.S., that's not the case in the U.S. The U.S. is open, but the passenger count is not there. The load factors, may be high in certain routes, but half the fleet is grounded, right? I've seen several articles talking about pilot shortage again in 2021. We don't have enough pilots, blah, blah, blah. Um, I've been hearing that for 10 years. There's no pilot shortage. Believe me. They're bringing on these cadets with 200 hours, 300 hours. They're throwing them in the right seat, deal with them. They pay $125,000, and suddenly they're pilots, and you're supposed to train them, and that's what I've done for many years now, right? We call them wonder childs, they're wonder. Suddenly they become pilots. Anyway, I don't. I think that's just hype when they're talking about pilot shortage. I think there's going to be a simulator shortage where when things do start going back to normal, you end up in this situation where you don't have enough simulator space to train pilots. That, I think, is something interesting. But there's nothing you can trade. I don't think flight safety or CAE simulators are in the NASDAQ, but uh, trading. But anyway, we still got a long way to go, believe me. And price is really getting ahead of itself relative to what's going on. Copa Airlines holding. China Eastern Airlines broke the previous high, doing really nice today. Turkish is one of these airlines that is very undervalued. Um, Same thing with kind of Air France, KLM. These are both, by the way, are $2 billion companies. Let me see if this is Air France. Here's Turkish. On a market cap, they're barely 2 billion, barely, and their revenues 7 billion. Earnings before the COVID was somewhere around 1 billion. That's the earnings, and the market cap is 2 billion. It's fucking insane. That's, that's dirt cheap. But again, you have this problem with Turkish that they're traded in lira. So people are factoring in a lot of inflation, and that's probably why it's so low. So that's about it for the overall market. So we are in wave three in many of these indexes. that we've looked at. Definitely emerging markets are hot right now, right? And again, they're in wave three. The dollar falling, right? It's affecting all the currencies as it should. But it is strengthening the emerging markets. Nasdaq under the hood is not really looking. I mean, yeah, it's at all-time highs. I get it, but it's not driven by market leaders. Um, Europe is doing okay, although Germany is lagging. UK is doing okay, right? They're performing all right. It's breaking out, doing good. Denmark is still kind of stuck in this range, but I think it's going to push higher eventually. World Stock Market Index on the back of emerging markets is doing really good. Airlines are getting a little bit ahead of themselves. Um, China is doing okay for now, but again, at some point, I think this is going to have to correct. Okay, but again, it's in a wave three. One, two, three. Okay. So we had some resistance for a while. Now everything broke through. Everything is following through. Okay, that's good. Um, but again, look at the real economy. Look at the damage. It's a lot of damage. A lot of damage. All right. So we're the VIX we talked about, right? It's not doing a whole hell of a lot. All right. So let's take a look at the Nasdaq a little bit closer, and it's just garbage, right? Garbachona. Nothing. Nothing. You got a nice little pop, drop, pop. Same thing. Nothing. Just high basing here. That's it. Uh, any questions, anybody? Going once, going twice, three times. All right. Give me 5 minutes. I'll be right back. All right, I'm back. All right, so let's take a look here at something that I kind of put together because I've been seeing this chart, Shiller's PE, how expensive it is, and so forth. And these charts are nice. It kind of tells you, yeah, things are fucked up and everything, but you need more data. You need more information to understand this a little bit better. The earnings yield, right, back in 1929 was actually quite good. You're getting an earnings yield in stocks of 5.63% versus the 10-year that was 3.5%. Plus, you had a dividend on top of that of 4.53% on top of the earnings yield. This person doesn't know earnings yield. Okay, so you know, it kind of, I guess, underscores that the central bank really fucked up with the banking. They should have just, gave whatever money was required. That was the whole point of them. That's why central bank existed, right? And they really kind of screwed things up. And then again, it's the scarring. It's not necessarily that everything fell apart. It's the scarring. It's the socioeconomic impact that resulted from that ended up being bad. Right. Then you go to 2000, and then you look at it. You're like, okay, the earnings yield is 3.44, way the fuck expensive relative to the 10-year. Why would you go and buy risky asset at 3.44% earnings yield when you can just buy a bond for 6%? So you're getting another 1.22%. It's garbage, right? Then you come to today, and then you're saying, well, there's still some value there. Like it or not, whatever. Agree with it or not, you know, QE, deficits, and so forth. It's still 2.699 versus a little bit less than 1%. Plus, you're getting a dividend of 1.6%. But again, think about this. What if there wasn't any QE? Unleash $7 trillion dollars into the market. What would happen? This interest rate would fucking skyrise. What would happen to the earnings yield? It would be so expensive, you end up back in the situation you were back in 2000, right? And also in 2000, not only did you have a very expensive stock market, uh, you also had surpluses. You didn't have a very high debt level. So, think about these things. When you look at a chart, try to understand it a little bit better. Remember, money chases yield. That's just fundamental. Uh, but keep that in the back of your mind and say, okay, what am I looking at? What does it really mean? What did other parts of the economy look like? And I think you'll get a lot more information out of it. Okay. Skip this one. All right. So this is for the employment, unemployment, pandemic unemployment, and so forth. Let's skip that for now. All right. So there's not much more to really talk about. This should continue a little bit higher. Clear it's in a 1, 2, 3 up, 1, 2, 3 up. Okay. A little bit higher here, up against this resistance area. See what ends up happening. We're probably going to end up with some kind of structure that's going to look like this. Right, something to this effect. Right. So 1, 2, 3 up, 1, 2, 3 sideways. Pennant broke out. Okay, fair enough. Then start looking for a correction. See if it holds here. For the bull case, and again, I'm struggling very, very, very much trying to find something that's I can sink my teeth into, other than just, well, stimulus is coming one day. I very, very difficult. I just have to rely on the charts. Anyway, if it comes down here, again, you can buy. If this breaks, comes down here, then you can buy. All right, pick your poison, your risk tolerance, whatever it is that you know that suits your portfolio. These are the places you want to buy for the long side. Now, the nice thing, if you want to call it that, is that so long as price remains above the previous high, this whole thing ends up being bullish, right? So these are good places to buy for that bigger upside. Anything above the previous high is bullish. If this breaks and you break the previous high, plus you break in the structures and all that blah blah, well then you start saying, okay, here we go back again, back down. Did it here, did it here, did it here a little bit, so you will get a deeper pullback. All right. And that's why I'm saying, in a lot of ways, from a charting perspective, it just makes things a lot easier so long as you can remain above the previous high, and you can use these trend lines as good risk reward points. Okay. From an economic standpoint, it makes no sense, none whatsoever. All right. Nasdaq pushing up a little bit higher. This is, again, it's the last 2 minutes that's going to make the difference. We'll, you'll maybe get another pop up, test that resistance area, right, and then see what it wants to do. But this kind of indecision, you know what this looks like? A bunch of algos just buying and selling, indecision, and nobody's really making any large bets, if you will, one way or another. That's what it looks like to me. I don't know. I always light up a cigarette. I never smoke it, and then I have to light it up again. All right, let's take a look at the market internals. First of all, earnings yield. Oh, and by the way, if you ever need any information about dividend yields or earning yields, there's a little tab here. It goes from chart, okay, or tab, and it goes all the way back to 1871. It's quite a very nice, useful tool if you want to look back in history. What's funny about it is that you're getting, once again, the same inequality, right? Why isn't this? This is dividend yield. Don't want this. This is the earnings yield, and again, the earnings yield goes all the way back, okay, to 1871. Now you gotta keep in mind that 1929 earnings yield is nothing like it is today, simply because of the QE and all the stimulus and the excess money. It's not the same country. It's not the same economy. Like Buffett used to buy companies with 6 PE, and then they would go up to 10 and 12, and he would be, making money. But it's not the same today, right? It's a much, much different ball game. Things have changed. All right. So for today, the earnings yield for today with the price appreciation is 2.68, the lowest reading we have seen yet. Okay. It will be like until January, and then it will go down. Well, I don't know. Honestly, I thought it would go down by now, to be honest with you. I think I said it yesterday. I'm really dumbfounded that I knew this was coming, that it would be bad. Wave 3 would come, shutdowns would be forced, like it or not, whatever, blah, blah, blah. Um, Obviously, that's going to affect earnings. And I would think that the market would have corrected at least for that, right? If it was forward looking, it would have corrected for it, right? Not very forward looking. It was like, fuck it, don't worry about it. They're going to stimulate. So that's what I mean, Jacob. I don't know if it's January. At this point, you got me, brother. I don't have a crystal ball. Uh, but honestly, I sincerely, I said, there's no way that this thing is not going to go down. At least 10%, something. You know, the fuck? Everything, an American is dying every 35 seconds. What, what don't you get? At least here in Philadelphia, everything is shut down. I can't go to the gym. I can't go to to the restaurant. I can't go to the bar. I can't. Not that I drink. I don't drink, by the way. But I, where are you gonna go? Go to Amazon and buy movies. I don't know. Buy things. We'll see. We'll see. But again, look at the price action. Horrible. This is a bunch of algos just going back and forth, back and forth, back and forth. Right? I don't think there's anything in here that resembles anything close to this. You see anything? I don't. Maybe down here. I mean, big range, but maybe. But maybe here. I don't know. This stuff looks really, really funky to me. Dow, don't, you know, I know what you're saying, but the Dow, you kind of stay away from it only because, I mean, it's large caps. I don't know, broke the previous high. What do you mean yearly chart? Like a monthly, like this? You're talking about going up against this resistance area? Take up? You mean something like this? Is that what you mean, brother? I don't know if there's a lag between when I say it and when you type it. I don't know. But that would be about 6% move higher. If you were to assume that what Biden said, well, first of all, before we even get there, let's let's take a look at the. I think it's here somewhere. First of all, we spent. I think it's this one. Yeah, we've already spent in 2 months $460 billion. If you add that up for the rest of the year, we're looking at 2.76 trillion deficits, which is about what 10%. If nothing happens, no stimulus, no nothing, there will be roughly about 10% deficits to GDP. I don't look at candles, my friend. Those things they don't mean anything to me. So yeah, so you'll get about 2.7 trillion. Fine. If there's a stimulus that's passed, and let's say they've been talking about numbers around 2 trillion, and then you got Biden telling you, well, that's just the beginning. That's just the start. Well, if you got 2.7 trillion and you add another 2 trillion, you're already up to 4.7. So he's got to be talking about another 2 trillion if it's just a start. So then where we go with that? Well, now we're going up to 6 trillion. Well, if we're going up to 6 trillion deficits for 2021, then we're looking at what? Well, the market cap of the American stock market is 33 trillion. So you're going to add another 6 trillion. That's about a 20% move, right? So the market would give you at least a 20% move higher. And that's when it takes us somewhere in the neighborhood of about 15,000 on the NASDAQ. Let me see this one. One second. Would take us to about small caps at about 2.2 2,200. S&P. We talked about NASDAQ. Did we talk about that? I think, yeah, we did, right? So that was 15.6. And S&P would be about 4,500. 400, something like that. Okay? So that's a lot of movement. Okay? It's a lot of movement. But remember, the more you print, the more you got to print. You can't take away the punch bowl. And if we believe that the economy in 1 year's time is going to increase substantially enough that the earnings yield is going to rise enough to offset that price appreciation, I think that's going to be it's very challenging. It's very difficult. I don't see that. I don't know. I don't know what to tell you, my friend. That's a lot of trillions, man. It's a lot of trillions. It's difficult. So what would that put the Dow, by the way? 20%. Fuck me. 20% will put the Dow somewhere around 36,000. I should have done the math in my head, but anyway. Okay, so about 36,000 on the Dow. And again, it makes our life a lot easier once we know, because I like confirmation. I don't like this. Well, it's coming. Well, yeah, it's coming. That's great, but um, I like to see it. Show me the money, bitch. Biatch. What makes it easy from a charting perspective is, again, so long as price remains above the previous high, you're good. Fuck it. As long as it remains above here, go long. It's simple. Uh, if it doesn't, if it comes back into structure or it comes below the previous high, then you wanna start to worry here a little bit if he does one of these jobs, because then it can really start to go. And it's true in all the indices, right? Same thing with the S&P 500. Same thing with the Nasdaq. Well, the Nasdaq still has the previous high here. It's got to push up a lot more in the Nasdaq to do that. But anyway, you want to probably hold the S&P a little bit better because it's more diversified. The fangs look very weak. They just, I don't know. I mean, not that they can't go higher, but right now they look funky. I am surprised. It went up so, yeah. Well, it doesn't make any sense, and that's the problem. Again, it's that greed. It's my friend saying, "Fuck, I should have put that extra million at work." Believe me, when people get greedy, they do stupid shit, and they do it in a herd mentality. And that's what's going on right now. And it's been going on for a while now. It's been going on, I think, for 2 years. Uh, I went bearish September 2019, but looking back at it now, look at the world trade. It started to taper off. So I don't know. Let it do what it's got to do. Let them bid up price on themselves. Nothing wrong with that. They're going to puke it up at some point. Even for a correction. Doesn't matter. They're going to puke it up. They just better hope to God that they don't really puke it up and blood starts coming out. Because the buy the dippers will never, ever see it coming. They won't. Just like I never saw it coming going to new all-time highs. 33-day recession? The fuck? And I'm talking about the stock market, not the real economy. That doesn't even make sense to me. I mean, you can measure it yourself. You can do it live. Here's the top. Here's the bottom. 27 days. Let's give it a couple more days. There you go. 32-day recession in the stock market. That's it. Never, ever, ever in history has it done that. Never. Never. Not even in December of 2018 did it take that little. It literally took 89 days, 3 months before it bottomed. And you're telling me now that when the situation is so much graver, so much worse, that, yeah, it's only 33 days and we're good to go. Right. That's a nice little setup, believe me. Nice little scam right there going. Honestly, what got me, and I say it, I'll admit it till I'm fucking blue in the face till the day I die, is this. I thought it was going to do this. I thought this was going to be a sharp 1, 2, 3 down. And it didn't. It's not what happened. And the worst part about it is that I kept saying, if you go back to all my old videos, I'm like, look, all deficits end up in savings. All deficits end up in savings. It just goes right through, right? Even because I've made videos before this, right? It just goes to savings, just goes to savings. There's no feedback loop. That's the problem. That's why we have inequality. That's why we have inequality. And I knew it. I didn't trade it. It didn't click in my mind. I didn't think it was going to happen as fast as it did. Honestly, I didn't. I thought the market would price in reality. It almost feels impossible. It does, honestly. 33-day recession in the stock market, and I shouldn't call it a recession. I should call it a, I don't know. What do you call it? Correction? It's more than 20%. I don't know what to call it, but that's just it's end game MMT is what it is. You're just going to pump markets. You do nothing for the economy, and you know what's the 4 trillion done for unemployment? Nothing. Nothing. Look at it. Garbachona. 933 million. Wait till December 29th or whenever it is that they get the last paycheck. Then what? Well, they convert all to unemployed. There you go. Good luck with that. Enjoy it. And it never fails. It's always the politicians that fuck shit up. Same thing with 2008, FAS 157. Mark to market everything. Illiquid assets don't matter. Mark to market. Right? And that just kind of froze the whole financial system. And whatever transpired after that is, history now. And again, I think, the Republicans, they're going to play hardball, and now Democrats are going to do stupid shit. And it's not until the market crashes that they're going to get their stimulus. Otherwise, why would they? What's going to force them? Hunger? They don't give a shit. They don't give a shit. They're politicians. The only thing they care that they measure themselves against is stocks. Again, politics doesn't make sense to me. It's just a bunch of dumb people. And that's the other thing, guys, that you got to consider. I don't know if you've ever been in a boardroom or a meeting in a large company, but just to fuck, pick a color on a airline seat is a fucking 2 week ordeal. You got to sit there and talk about it. And, okay, look at this material. Uh, should we go with leather or should we go with fucking fabric? Well, leather is easier to clean. Uh, if somebody throws up, but this material, this new material, it's cloth, but the throw up doesn't stick. Well, what about the biohazard? Are you going to be able to clean it? Well, we have this new solution now that we can put on the. You're sitting there for hours and you're just like, what the fuck? Just pick whatever the hell you want, pick the color, and that's it. But that's not how it works because you, Sorry, my headset battery died out. Maybe from me yapping too much. But yeah, I mean, just pick the fucking C color, pick whatever the hell you want, and that's it. Get it over with. Well, this one is a little bit wider, this one is a little bit thicker. It's the same thing with airline procedures. Well, should we do the lights first and then the flaps, or should we do the flaps first and then the lights, or should we do, the spoilers and then the flaps and then the lights, or is it the lights, spoilers, flaps? I don't know. Let's talk about it. And you're sitting there like, geez, guys, who cares? It's going to happen in a fraction of a second. Who cares? Right? But that's politics, man. That's what happens when you have a big company or a country, and especially if people hate each other, you end up with this kind of lunacy. But the problem is that in this kind of lunacy and in this kind of environment, real people get hurt. Real people get hurt. I don't know. I think if I ever owned an airline, I would probably be like some kind of like dictator or something. I don't know. I hope not, but that stuff drives me crazy. Point of control is still the same. Nothing. It's all the way down here for the longer term. Nothing different. Any other questions? It's holding point of control. Remember yesterday, before the market closed, point of control was up here. And then it did some consolidation in here, and then it came down. Right now, time has been spent above the point of control, so you can tell that there's not a whole hell of a lot of volume going on, right? So you would expect that so much time has passed with so much trade, and it hasn't shifted back up to the top here. Where yesterday it happened like really fast. And the reason that happened, by the way, was because you had this thrust up move, and this looked like a P. I don't know if you remember it, but this looked like a P, which was a short covering rally. And then it came down, corrected, and then again you got one of those short covering rallies, and the point of control was here, and then quickly it shifted to the bottom. There was a lot of volume that came in here, a lot of volume, and today is just garbage. I mean, I should be playing video games right now instead of sitting here. So that's about it, guys. There's nothing really exciting going on. Um, just taking a look at the overall price action, everything is flat. The big movers today were airlines, uh, cruise liners, Carnival. I think is up 6-8% or something. Right? Nothing is kaput. We'll wait the last 9 minutes. Again, you never know what happens with these fucking things. Last 2 minutes it gets crazy. And again, the key here is, I think, and this is probably another problem, is that if it does come back into structure here, then it starts to fall apart. From failed moves comes fast moves in the opposite direction. In this case, it didn't happen because it came in and then quickly was pushed out of structure. A little bit of a follow through, but that failed. So it's trying to hold above, the structure, and I think if it comes back into structure, you might see a very rapid move, which would indicate to me that some kind of news will come out, that something is delayed. I don't know, whatever. So another 8 minutes is not going to kill me. I want to see if something like that does play out. Because then you end up with a situation that, okay, well, we broke the top. Guess what? We're going to break the bottom. Right? So that's important. I forgot to do the market internals. We started to, and then I started yapping. So let's take a look here. All right, so real estate is leading, energy and industrials. That's not what you want to be leading. Utilities, okay, so there's nothing there really. 5 days, healthcare, communications, there's nothing. Garbage, garbageona. Look how close it is, huh? It's like like everybody's looking at the same trend line, right? Sometimes it fucks with my mind. It's like, look at that, magic, magic. Why do you think Tesla is so overbought? Well, I think the thing with Tesla, you have the right political environment. I don't think it's got anything to do with the car. Uh, I mean, they sell some licenses, I just think it's in the right political environment with, everything is green. Let's save the planet, and Tesla is going to do it for us. We're going to do space exploration. We're going to do solar panels. We're going to do everything. Uh, that's it. It's that simple. People get excited. They like the idea. They like the guy. They like what it stands for. It's a good brand in their minds. But you're not doing anything special, right? For normal people, you look at it, you're like, I don't see anything there. And I don't know. I might be wrong. There might be something I don't see. I don't know. Maybe I'm wrong. I don't know. Doesn't make sense to me. Maybe I'm getting old. Shut up. All right. 5 more minutes left to go. My headset is failing. Yeah, 2000, what was it? 2008. I was 38 years old. And I could certainly understand and appreciate the Apple iPhone. So I knew that bitch was going to go. I had seen it with GoPro. I had seen it with Crocs. I had seen it, with so many other good products that were going to become very popular. Tesla, I don't see it. Even Amazon, I didn't see it. Because I'm like, okay, what's this guy doing that's special? Nothing. He's just selling shit through his website instead of stores. So what? Yeah. It's not going to make the economy bigger. It's not going to make it better. The first company that I kind of identified. There was several of them, but when I started thinking more long term, it was Target. That was back in '99, I guess. And I kept looking at it. It was such a much better Walmart, and it had some pretty nice things. And I'm like, man, this company is really going to grow. It hadn't yet made it to the East Coast, so I'm like, this place, this thing has so much growth potential. It's a good store. And then after that came Panera Breads and Cheesecake Factory, Apple, of course, Nvidia. I'm a gamer, so I like the stuff that we're making. United Airlines at the bottom. Oh, I remember that. All right. Coming back into structure, there's literally 2 minutes left to go. And that's what I tell my son. I'm like, okay, look around, see what you like, mark it in your head, say how much does this, first of all, is it in the stock market? If it is, follow it, see if you're right over the course of time. See which companies make it and which ones don't, and then try to figure out why. And I would say the same thing to all of you. You don't necessarily have to trade things. You can just mark them, try to understand them. And you do it enough, and you start proving to yourself that, yeah, I got a pretty good eye. I kind of get this. And then you get a little bit more in depth about stuff, and you progress from there. And Med Systems has been my all-time greatest stock, Everest. I had some accounting problems. That's this one. Fucking beast, this thing. I've taken profits, but I haven't sold it. Well, it's down at the point of control, the previous support area. That's it. Not there yet. There he goes, 4 o'clock. All right, so just a very boring day today. That's about it, guys. Any other questions? Anybody? Jacob, thank you for coming back. Thank you for your questions. Uh, I'll talk to you guys again tomorrow. Hopefully, we're going to have a little bit more resolution as to what's going on. It's Friday tomorrow, so big day. Big day. All right. Take care of yourselves, and I'll talk to you soon. Thanks again. Oh, guys, don't forget, please like and subscribe. Please. If I feel gay enough to say it, at least reward me. And don't forget to come down to patreon.com/RealMacro. Come down and subscribe. All right, guys. Thank you very much again. Take care. Bye-bye.